unscheduled.strategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Monday, March 10th. After a pretty busy schedule last week, we have a somewhat relaxed day coming up, at least on the news front. Coming up today, only at 9:30 GMT, we have investor confidence from the Eurozone, which might have a moderate impact on European stocks and the Euro. Then at 12:15 GMT, we have housing starts in Canada, which is a gauge of the Canadian economy, so it might have a slight impact on the Canadian dollar and Canadian stocks, but we don't have anything of major impact scheduled for today. Moving over to the markets, the S&P 500 yesterday closed pretty much unchanged. This was after we had a better than expected results from the non-farm payrolls. Unemployment ticked up by 0.1%, but new jobs were created at a faster pace than investors expected. This more or less confirmed, as far as most analysts were concerned, that the Fed is going to continue with its taper during the FOMC meeting at the end of the month. During Asian trading in the early session today, we had some bad trade data from China, which indicates that the second largest economy is continuing to slow down, which led to a drop in Asian stocks. Both the Shanghai and the Hong Kong index dropped by more than 1%. And that also led to a drop in industrial metals, as well as some continuing pessimism into the markets today, with the S&P 500 futures trading down by 0.3% at the beginning of the European session. The euro is sort of plateauing after this strong move from Thursday. It's trading between a range of 138.30 and 139. We don't have any major news to push this above established ranges. The pound is also trading pretty much within a range over the last couple of weeks. That's between 166.70 and 168 on the upside. The yen versus the dollar has shifted slightly higher from this 2-week-long trading range. It's now above 102.75, which has now become support, and we have resistance at 103.30 in the short term. And finally, we have gold. Gold dropped on Friday, and it could be heading to some form of correction here. If it were to break through this very short-term trend line, we might see a correction over the next couple of weeks. However, RSI is showing that that gold is not at the moment oversold. We still have a range of 1,325 as support and resistance at 1,356. And that's it for today. Thanks for watching and happy trading.